Hello and welcome back to Managerial Accounting. This is Dr. Annette Moultrie, and this is part 2 of chapter 1, Introduction to Managerial Accounting. Again, this video and all other videos on my YouTube channel is intended for educational purposes only. I do not own the copyrights to the materials presented. All rights belong to their respective owners. So in this video, we will discuss learning objective. We will start with learning objective 1.2, which is classified costs used in managerial accounting. We're starting with objective 1.2. So how are costs classified? Now, businesses can be classified as service. Let me make sure. Yes, I'm recording. Businesses can be classified as service, merchandising, or manufacturing companies. Now, the three categories of businesses, they differ in what they offer to the customer. A service company offers its time, its skills, and knowledge for a fee. Merchandisers, they buy products from suppliers and then resell them to customers. Merchandisers, they keep an inventory of products, and their inventory products costs are referred to as product costs in your textbook. A manufacturer produces goods by converting raw materials into a finished product. Manufacturing companies, they use labor, equipment, supplies, and facilities to convert raw materials into finished products. Manufacturing companies, they track costs on three kinds of inventory. You have your raw materials inventory, your work in process inventory, or WIP, and then you have your finished goods inventory, or FG. Now, the raw materials inventory is materials used to manufacture a product. The work in process inventory, it consists of goods that have been started in the manufacturing process, but are not yet completed. Then, of course, you have your finished goods inventory, which represents completed goods that have not yet been sold. Manufacturing companies classify costs in many different ways. For example, costs can be classified as direct or indirect. So what is a direct cost? A direct cost is a cost that can be easily and cost-effectively traced to a cost object. A cost object is anything for which managers want a separate measurement of costs, and maybe a product, department, sales territory, or activity. Now, costs that cannot be easily or cost-effectively traced directly to a cost object, or they are indirect costs. So you have your prices or sale prices is the amount the company charges the customer for the goods or the services provided. So that cost is the amount the company incurs to acquire the goods or services. If a company purchased an item for $4 and sells it for $10, the cost, of course, is $4 and the price is $10. That's simple, right? Product costs are classified into 3 categories for manufacturing companies. You have your direct materials, your direct labor, and your manufacturing overhead. Direct materials consist of raw materials that are converted into a finished product. Direct materials can be easily and cost-effectively traced to the product, so they are considered to be direct costs. Direct labor is the labor of employees who convert raw materials into finished products. Direct labor is also a direct cost because it too can be easily and cost-effectively traced to the product. Manufacturing overhead, as you see here, it refers to indirect manufacturing costs that cannot be easily traced to specific products. Manufacturing overhead includes all manufacturing costs other than direct materials and direct labor. In other words, it includes all of the supporting production activities. Manufacturing overhead is also called factory overhead or indirect manufacturing costs. It is important to be able to distinguish between direct and indirect materials and direct and indirect labor. Indirect materials are materials used in making a product, but whose costs either cannot be conveniently traced directly to specific finished products or that are not large enough to justify tracing to a specific product. Indirect labor is labor costs for activities that support the production process, but either cannot be conveniently traced directly to a specific product or are not large enough to justify tracing it to a specific product. Here you see in Exhibit 1.6, it illustrates 3 different manufacturing costs and the differences between direct and indirect costs. Direct materials such as the processor, that's the direct material. The direct labor is the assembly workers' wages. The manufacturing overhead, such as what you see here, is the glue that is used in the tablet. And then you have the direct materials and direct labor, which are your direct costs. And your manufacturing overhead is an indirect cost. Prime and conversion costs. Prime costs combine the direct costs of direct materials and direct labor. In a manufacturing process that is labor intensive, the direct costs are the primary costs. Labor intensive means people, not machines, do most of the work. In that type of environment, managers may want to concentrate on these direct or prime costs. So to be profitable, it is vital for the company to control these costs. Conversion costs. Conversion costs combine direct labor and manufacturing overhead. direct labor, and manufacturing overhead. That's conversion costs. It's a combination. Now, these are the costs to convert the direct materials into the finished product. So in a manufacturing process that is machine intensive, the cost of direct labor is minimal because what? Machines do most of the work. Employees primarily set up and they oversees the machine production. Overhead costs, however, can be substantial, including the cost of utilities and depreciation on machinery. In that type of environment, managers may want to focus on total conversion costs rather than track or direct labor and manufacturing overhead separately. Here you see in this, on the screen, you have a Venn diagram. Now the Venn diagram, it is showing you the prime cost region where it is overlapping the conversion cost region with the resulting areas labeled as prime cost only equal direct materials. And then you have the conversion costs only where it's equaling manufacturing overhead. And here in the middle, you see the overlap. And the overlap is direct labor. Product and period costs. Now, another way costs can be classified is a product or period costs. Product or period costs. Now, this characterization is required when preparing financial statements. Product costs include the cost of purchasing or making a product, direct materials, direct labor, and manufacturing overhead are all examples of product costs. So the product costs are recorded as assets in inventory accounts on the balance sheet when they are incurred. Product costs are recorded as assets in the inventory accounts on the balance sheet when they are incurred. Now, the cost does not become an expense until the company has sold the inventory. So at that time, the cost is reported as cost of goods sold on the income statement. Period costs, on the other hand, are non-manufacturing costs. Period costs are selling and administrative expenses and other expenses such as the taxes and interest. Now, these costs are matched with the revenue of a specific time period and expensed in the same accounting period. So some examples of period costs could include the salaries and wages of the accounting staff. It could be for rent of the building. It could be sales commission paid to the sales representative, or even utilities paid to the paid for the marketing office. Here you see in Exhibit 1A, it is illustrating the difference between the product and period costs. Again, you have your period costs, which are non-manufacturing costs, which could include selling expenses, salary, administrative expenses, building rental fees. So they are expensed when they are incurred. expense when incurred. And the product costs you see on your right, the green section, they are manufacturing costs. So that will include your direct materials, such as the processor. You have your direct labor, such as the assembly workers' wages. And then you have the manufacturing overhead, which you see is the glue that is used in the tablet. Now, these are all recorded first as assets, and then they are expensed when the product is sold. Here in Exhibit 1.9, it provides some examples of Smart Touch Learning's period and product costs. Here you have the period costs, which includes selling and administrative, and you have your product costs, which include direct materials, direct labor, and manufacturing overhead costs. So you see that there's a depreciation on manufacturing equipment. The manufacturing overhead, you see a depreciation on office equipment, right? And the selling and the period costs. Then you have property taxes and insurance on office, which is considered a period cost. Property taxes and insurance on factory is product costs along with the supervisor's salary. Now the CEO salary is included in the period costs under selling and administrative. You have the wages for assembly line workers, direct labor, you have batteries, the processors, and other materials used in making the tablets, which is you have your direct materials, then you have your manufacturing supplies, your freight costs and purchases of materials, then you also have delivery expenses, which is under period costs, selling, and administrative. Okay, and that's the end of 1.2. We're going into 1.3, which involves prepare financial statements for a manufacturer, including a balance sheet, income statement, and schedule of cost of goods manufactured. In financial accounting, you learned about the financial statements for service and merchandising companies. So in this chapter 1, now we will focus on how the financial statements are different for manufacturing companies. First, we want to examine the balance sheet. Service companies, they sell their time, their skills, their talents, their knowledge, and therefore carry no inventories on their balance sheet. Okay? Merchandising companies resell products. They resell the products they buy from the supplier, and they record the cost of inventory purchase as an asset, which is merchandise inventory on their balance sheet. And what you learned earlier is that manufacturing companies, they keep track of costs using those 3 inventory accounts, which are the raw materials inventory, the work in process inventory, and the finished goods inventory. On a manufacturing company's balance sheet, the 3 inventory accounts will be listed in the asset section. Here in Exhibit 110, it shows a comparison of the balance sheets for service, merchandising, and manufacturing companies. Now, notice that the accounts highlighted in blue, right? It illustrates the different kinds of inventory accounts used by various types of companies. So in the merchandising company, you have merchandise inventory, and in the manufacturing company, you have raw materials, work in process, and the finished good inventories. Now, partial balance sheet shows assets for service company, merchandising company, and manufacturing company as of December 31st, 2026. Income statement. On the income statement, because service companies do not have any product costs, they only record period costs, such as your salary expense and rent expense. In contrast with service companies, merchandisers' income statements, they usually report cost of goods sold as major expenses. Now, cost of goods sold represents the business's cost of the merchandise inventory sold. However, in a manufacturing company, as in a merchandising company, the cost of goods sold is usually the largest expense. However, because a manufacturer makes the product it sells, the calculation of cost of goods sold is different. Here you see the difference between a merchandising company's calculation of cost of goods sold and your manufacturing company calculation of cost of goods sold. So here you see the differences highlighted in blue. Okay. Here you see an income statement that shows revenues for service company, revenues for merchandising company, and manufacturing company. Month ended December 31st, 2026. Flow of product costs in a manufacturing company. Now, understanding how to calculate cost of goods sold manufactured, and ultimately cost of goods sold requires knowledge of how our products costs flow through a manufacturing company. Again, understanding how to calculate cost of goods sold manufactured and ultimately cost of goods sold, it requires knowledge of how product costs flow through a manufacturing company. And here you see in Exhibit 112, it shows you the flow of product costs. Now, because manufacturing companies convert raw materials into a finished product, you will notice that the flow of costs starts with raw materials. Now, any raw materials purchased along with any beginning raw materials inventory, it gives the company raw materials available for use. The raw materials are either used in production or they remain in the raw materials inventory and are reported on the balance sheet. Now, during production, the manufacturer uses direct labor and manufacturing overhead, including indirect labor and indirect materials, to convert direct materials into work in process inventory. The cost of the beginning work in process units is added to the cost of direct materials, direct labor, and manufacturing overhead incurred during the period. This is the work in process inventory costs to account for. when the manufacturing process is complete, the costs are then transferred to finished goods inventory. The cost of manufacturing the finished goods make up the cost of goods manufactured. Now, if the work in process units are incomplete, the costs remain in work in process inventory, and it is reported on the balance sheet. The cost of goods manufactured is used on the income statement to determine the cost of goods sold. So only when finished goods are sold will the cost be transferred from the balance sheet to the income statement as cost of goods sold. Calculating cost of goods manufactured. Cost of goods manufactured is the manufacturing cost of the goods that finish the production process in a given accounting period. And according to the textbook, there are 3 steps to calculate the cost of goods manufactured. You calculate, step 1, you calculate the direct materials used. 2, you calculate the total manufacturing costs incurred during the year. And step 3, you calculate cost of goods manufactured. Here we're using the company Smart Touch Learning, okay? So assume that Smart Touch Learning begins the period with a direct material balance of $70,000. Now, during that year, the company purchased $350,000 of direct materials. And the ending balance of direct materials is $65,000. So you have the beginning direct materials, $70,000, purchases of direct materials, including freight in, $350,000. So the direct materials available for use is $420,000. Then you have your ending direct materials, which is $65,000, and you subtract that, your ending direct materials from your direct materials available for use, then you have your direct material use at $355,000. Smart Touch Learning next determines the total manufacturing cost incurred during the year, which include the direct materials used. You saw in step 1, direct labor of $169,000. Not sure why it's not showing here. I mean, the entire screen, but anyway. You have direct labor use at $169,000. You have manufacturing overhead. Then the company manufacturing overhead includes indirect materials of $17,000. The indirect labor supposed to be $28,000. Then you have the depreciation on the plant and equipment at $20,000. And then you have plant, utilities, insurance, and property taxes, $18,000. Okay. So the direct materials used Then you have the direct labor, you have manufacturing overhead, indirect materials, going to have indirect labor, depreciation, you have utilities, and all of this information is in the textbook. Smart Touch Learning calculates cost of goods sold, manufactured, by adding the total manufacturing cost incurred during the year. Okay, they're going to add that total to the beginning work in process inventory to determine the total manufacturing cost to account for it. The units that are represented by these costs will either be completed and transferred to the finished goods inventory, or they will be partially completed and remain as ending work in process inventory. So let's assume that Smart Touch Learning has some tablets partially finished, which represents $27,000 of ending work in process inventory. So here you have the beginning work in process inventory at $80,000. Total manufacturing costs incurred during the year is $607,000, which brings you to $687,000 total manufacturing costs to account for. And then we talked about the $27,000, which represents the tablets that are partially finished of $27,000. And when you subtract that from the ending work in process inventory, $27,000, from the total manufacturing cost to account for, which is $687,000, you get a cost of goods manufactured of $660,000. Here, Exhibit 113, it shows a completed schedule of cost of goods manufactured for the company, Smart Touch Learning, which includes all 3 steps. Okay, so a company prepares a schedule of cost of goods manufactured to show detailed information about the cost of making its inventory and is part of the calculation of cost of goods sold. Here you see Smart Touch Learning schedule of cost of goods manufactured, year ended December 31st, 2027. Cost of goods sold represents the cost of the finished goods inventory that has been sold. Let's assume that Smart Touch Learning has beginning finished goods inventory of $0, and they have an ending finished goods inventory of $60,000. Now, the company will calculate cost of goods sold by adding the beginning finished goods inventory, which is $0, to the cost of goods manufactured, which is $660,000, to get the cost of goods available for sale, which is $660,000. Then, ending finished goods inventory, $60,000, is subtracted to obtain the cost of goods sold, which is $600,000. Here you see in Exhibit 114, it shows the completed income statement for the Smart Touch Learning company. Now notice that the cost of goods sold is subtracted. It is subtracted from net sales revenue to determine gross profit. Next, the period cost, selling and administrative expenses are subtracted to determine net income. All of this to determine net income. So in Exhibit 114 that you just saw, it summarizes the flow of costs through the Smart Touch Learning inventory accounts. Here you see is Exhibit 115, which shows the flow of product costs through Smart Touch Learning's inventory accounts. And it shows the three inventory accounts: raw materials, work in process, and finished goods inventory. Here it shows that you should notice that the same format is used for all three inventory accounts above. You have your beginning balance plus additions minus ending balance equal amount used, manufactured, or sold. Okay, why would knowing the unit product cost be important to manager? Why would the unit product cost be important to a manager? Well, knowing that the unit product cost helps managers decide on the prices to charge for each product, to ensure that each product is profitable. They can then measure operating income, and also they can determine the cost of finished goods inventory. As you see here, managers can use the schedule of cost of goods manufactured to calculate unit product costs. Here you see Smart Touch Learning produced 2,200 tablets during 2026. The cost of goods manufactured, 660,000, divided by the total units produced, 2,200 tablets, equal the unit product cost, which is $300 per tablet. So during 2026, Smart Touch Learning sold 2,000 tablets. So the number of units sold times the unit product cost equal cost of goods sold. 2,000 tablets sold at $300 each equals $600,000. And we're moving to Learning Objective 1.4, describe business trends affecting managerial accounting. And I believe this is the last objective. So let's move forward. What are business trends that are affecting managerial accounting? It appears that we're shifting toward a service economy. The United States Bureau of Labor Statistics predicts service providing sectors will account for more than 90% of projected job growth from 2016 to 2026, especially in healthcare and social assistance, professional and business services, and leisure and hospitality sectors. The Bureau of Labor Statistics also reports that service industries account for 4 out of 5 U.S. jobs. There's also global competition. Companies are moving operations to other countries to be closer to new markets and also to maintain competitiveness. Now, other companies are partnering with foreign companies to meet local needs. And we're also experiencing a time-based competition. Now, time is the new competitive turf for world-class business. Enterprise resource planning, ERP systems. They integrate all of a company's worldwide functions, departments and data, right? E-commerce allows companies to sell to customers around the world, providing 24/7 access to information and products. Now, managers can reduce the cost of inventory, and they can also minimize the risk of obsolescence by using just-in-time or JIT management system. So using that JIT system means producing products just in time to satisfy customer needs. Also, there's an advancement in technology, especially with AI. Now, technological advances can provide companies with competitive advantages. Okay, software such as R programming, you have Tableau and Power BI allows accountants to work with information technology teams to analyze large quantities of data and use the analysis to make more informed decisions. You also have the robotic process automation, or RPA. And then, of course, you have AI, artificial intelligence, also use technology to improve operational efficiencies and also decrease costs. Total quality management, or TQM. I'm pretty sure you've heard this term before. But what is it? Well, it is a philosophy. It is a philosophy of continuous improvement in your products and also in the business processes. Continuous improvement leads to what? Fewer defects. It leads to higher customer satisfaction. TQM also emphasizes the importance of each person in the organization, creating a culture of cooperation across all business lines. Now, each step in the process adds value to the end product, and this is referred to as what? The value chain. The triple bottom line. The triple bottom line refers to profits, people, and planet. It is the economic, social, and environmental impact of doing business. Now, companies are recognizing that they have multiple responsibilities and that generating profits for owners and investors is only one aspect of being a socially responsible organization. They're realizing it. I thought there was only 4, but it appears that we have 5. So learning objective 1.5 is the very last one, which describes how managerial accounting is used in service and merchandising companies. How is managerial accounting used in service and merchandising companies? Knowing the unit cost per service, it helps managers decide on the price to charge for each service provided. Now, service companies do not have product costs, so operating expenses are considered in calculating the cost per service. Merchandising companies need to know which products are most profitable, and that this information helps managers establish selling prices. The unit cost per item is found by dividing the total cost of goods sold by the total number of items sold. And let's look at this example here. In 2024, Smart Touch Learning incurred costs of $3,900 and provided 1,950 e-learning services. So you have the total operating cost divided by the total number of services provided will equal your unit cost per service. So you have the $3,900 divided by 1,950 services, e-learning services, is equal to $2 per service. So in December 2025, Smart Touch Learning sold 260 tablets. You have the total cost of goods sold divided by the total number of items sold equal your unit cost per item. You have $90,800 divided by 260 tablets equal $349.23 per tablet. And that is the end of Chapter 1, Introduction to Managerial Accounting. So stay tuned for Chapter 2, which is Job Order Costing. Thank you for watching, and I'll see you next time. Thank you for watching, and please do not forget to click the like and subscribe button. And if you have any questions or comments, please leave them below and I will reply to you.